Hello everyone, and welcome to video 3 of the Portfolio123 series. In this video, I'm going to show you how to backtest a stock screen that you make custom. So here's the screen that we created in the last video. We've got a list of companies that have a dividend yield of at least 2%, a payout ratio less than 80, higher than average ROI over the last 5 years from both their sector and the market, and they've increased their dividend for 10 consecutive years. So now let's say we want to see how this screen is performed over time. What you can do is go up here to Backtest, click on that button, and it's going to bring up some more options for you. So all you're going to do in this particular section, just leave everything alone. The only thing you're going to do is change the rebalance frequency, which is how often you want to buy or sell stocks. Change that to, let's say, every 52 weeks. And you want to change the period of time to be maximum. I have access going back to 2004. Depending on the subscription level that you have, depends on how long back you'll be able to get. I have the ultimate subscription, so I can get back over the last 20 years. So all you do then is just click Run Backtest. And so what we can see, so this is how that screener would have performed over time. So you can see that it would have underperformed the market on a total return basis. The annualized return was a little lower. However, this did have quite a bit lower of a maximum drawdown relative to the S&P 500. So if you're looking for a strategy that has lower risk, this could be an option for you. And you can see that the risk-adjusted returns are a little bit higher than the S&P 500. So overall, this strategy does generate alpha, which is risk-adjusted return of 1.7% per year. So let's see if we can make any improvements to this. So let's go back to rules and let's add maybe some momentum. So let's go to Add Wizard Rule, and we're going to do total. And we're going to do price. So let's do price change relative to the benchmark. So we want this stock to have been outperforming for, let's say, the last 3 months. And we'll click on Add Wizard Rule. And then all we need to do now is just hit Rerun Backtest. And all the prior will be saved. And we can see how this compares. And you can see this actually made it worse. And so let's say we want to switch that. So maybe we want to see what's been outperforming the last 3 months. So we click on Wizard Rule here, and instead of doing underperforming, we're going to do outperforming for 3 months. Outperforming through, and then hit. So change that, and then hit Update Wizard Rule, rerun the backtest, and now we can see that that improved our results quite significantly, actually, particularly on max drawdown. So by using simply a 3-month performance rule, you could save yourself quite a bit of grief back in 2008 and 9, at least historically. You can see that the Sortino Ratio, risk adjusted, is higher, and our alpha improved from, I think, 1.75, and our alpha improved from 1.75 to 2.28. You also learned that buying stocks that have been underperforming is actually a worse strategy than buying the ones that have been outperforming. So these are little nuggets that you can learn when just running through different scenarios, testing different items, and running these backtests is honestly the only way that I got over trying to buy companies that had terrible price performance. I thought low price meant high value, and in doing all these backtests, I learned that that's not actually the case. In fact, it's generally better to buy companies that have been performing well than it is to buy those that have been performing poorly. I would have never been able to get there if it wasn't for running simulations through this software.